Hello dear students, here we are on our third chapter, financial statements of a company. So in this chapter we'll be discussing about the concept of financial statements, its features, its objectives and different types, so on. So before we start this chapter, you need to recall all those things which we were studied in our plus one accountancy. As you know, in our plus one accountancy, at the beginning, at the introductory stage of accounting, we learned that there are four functions for this accounting process. What all are the four functions? Recall all those four functions. Here are the four functions of accounting. The first function in the accounting process is recording, where we will record those transactions, the financial transactions. We'll record the financial transaction in journal. That was the first steps in the accounting process. We'll record all those financial transactions in the journal. And after recording all those transactions, we will classify them into different accounts based on the nature of those accounts. So we'll be classifying all those accounts according to their homogeneity into different accounts. And after we completing this classification, we will be summarizing these accounts by transferring all the nominal accounts into profit and loss account and all the real and personal account in the balance sheet. That's we call summarizing. So in the summarizing process, we will be summarizing all the financial performance of the business by preparing profit and loss account and balance sheet. So here we have, in the previous sessions, we have completed all these three stages: recorded, classified and summarized. Now we need to communicate all these data to those interested parties. So now we are on this fourth function, interpreting or communicating the results of the business to the interested parties. So our third chapter is related to the communication of this recorded data to the interested parties. So here we will be communicating all the recorded facts to the interested parties through a statement called financial statement. So we can say that financial statements are used to communicate the business data or the financial data of a business to the interested parties. Financial statement simply refers to the communicating the recorded facts of the business to the interested parties. See, all the financial transactions are recorded, classified and summarized in the process of accounting. All these inputs are given to the external parties and internal users in a statement called financial statement. So financial statements are the end results of the business regarding its financial performance, and which will made available to the different users in a statement that's called financial statement. So these are the basic and formal annual reports through which the corporate management communicates financial information to its owners and various other external parties, which include investors, tax authorities, governments, employees, customers, etc. So financial statements are mainly used for communicating the financial results or the financial information. Financial statements are the instruments which are used to communicate the financial informations regarding the business to the different users of accounting. As we know, we have studied different users of accounting. There can be internal users as well as external users. Internal users are the persons who are within the organization, and the external users are the persons who are external to the organization. Then let's have one more meaning. We can say that financial statements are the chronologically recorded facts about events expressed in monetary terms for a defined period of time, are the basics for the preparation of periodical financial statement, which reveal the financial position as on the date and the financial results obtained during the period. So in this definition we can See that financial statements are expressed in monetary terms. Financial statements are usually expressed in monetary terms. Accounts involves only the financial transaction, that means the monetary transaction, and which are meant for a specific period of time. All the financial statements are prepared on a specific period of time as the end of certain periods. As you know, usually the balance sheet and profit and loss account are prepared usually at the end of the year or half yearly or quarterly. So these financial statements are prepared usually at the end of an year or end of a specific period. That may be a year or half year or quarterly or monthly. It depends on the organization, but every organization or every company have to make annual reports. The preparation of financial statement at the end of the period is a compulsory case for every companies. And as a definition, as per AICPA, that means American Institute of Certified Public Accountants, they define financial statements as the statements prepared for the purpose of presenting periodical review of reporting on progress by the management and deal with the status of investment in the business and the result achieved during the period under review. They reflects combination recorded facts, accounting principles, personal judgments. So that means, as a conclusion, financial statements is a report which shows the current growth of this company based on the previously recorded facts. So these are the basic uh, concepts regarding financial statements. So simply we can say that financial statements are the reports of the previous year reports, I mean previous year performance. Or in other words, we can say that financial statements are the results of the performance of an organization based on their financial history. So it is used to communicate the performance of the business to the interested parties. So financial statements are the statements which are used to communicate the result of the business to the interested parties. Here we can have the different characteristics or the natures of financial statement. Let's move into the characteristics or feature or natures of financial statements. The first one is financial statements are the recorded facts. Financial statements are prepared on the basis of the facts in the form of cost data recorded in the accounts books. This is the end results of our recorded accounts books. Financial statements are the end results of our recorded accounts books. As you know, the important financial statements are the profit and loss account and balance sheet. So both of these statements are the end results of the recorded accounts books. As you know, all the nominal accounts are summarized into profit and loss account, and all the real and personal accounts are summarized into balance sheet. So these statements are the end results of all the recorded accounts books. And the next feature is accounting conventions. Financial statement makes use of different accounting conventions. Various accounting conventions are followed while preparing financial statements. The conventions of valuing inventory at cost or market price, whichever is lower, is an example. So different kinds of accounting conventions, principles, concepts, assumptions, everything is followed while preparing financial statements. For example, in your business, if all the things or all the material or all the financial thing which you are going to exhibit in these financial statements are based on certain accounting conventions. One of the example is given here. All the inventories are valued at cost price or market price, whichever is less. For example, whatever inventories or asset, whatever it may be. For example, you having an asset worth of rupees 1 lakh and its current market price is only 60,000 rupees. The price of the cost of this asset is 1 lakh rupees and the current market price of this machine is rupees 60,000. My question is, which one will appear or which price will appear in the statement of finance. So according to the conservatism or prudence principles, the loss must be anticipated. So if the value of the asset is only 60,000, I mean the market value of the asset is only 60,000, we need to write off the value of the asset into 60,000 and we need to change the value in the financial statement as 60,000. So the convention of prudence is used here. So same way, different accounting conventions are used while preparing financial statements. That means there is a strict and rigid rules while preparing financial statements. And moving on, postulates. Postulates refers to accounting or financial statements are prepared on certain assumptions. It's based on certain assumptions, certain pre-assumptions or prerequisites. That prerequisites is known as postulates. Postulates refers to pre-assumptions or prerequisites. So these statements are prepared on based on some pre-assumptions, just like money measurement concept, realization concepts, going concern concepts, everything. So one of the main accounting concepts or accounting assumption which is used while preparing financial statement is going concern concept. Going concern concept. On the basis of going concept, we are closing every accounts and we will be showing the closing balance in the financial statement that is to be carried over to the next year. So we will be carrying over current year's balances to the next year based on the going concept, which assumes that the business will be continuing for the n number of years. And like just like money measurement concept, money measurement says that all those things which can be measured in terms of money are used only in this case of financial statements. So all those transactions or events which are in terms of money are used in the financial statements. So that means all the non-monetary transactions are ignored while preparing the financial statements. Just like we are using different kinds of assumptions or prerequisites for the preparation of financial statement. So this is an end result of certain pre-assumptions. Financial statements are the results of a certain pre-assumptions. So you need to agree with this pre-assumption, then only this financial information will convey you the truthful results of this business. സോ നിങ്ങൾക്കിപ്പോൾ അത് ഒരു ഫൈനാൻഷ്യൽ സ്റ്റേറ്റ്മെന്റ്സ് നിങ്ങൾക്ക് അത് പൂർണ്ണമായിട്ട് വിശ്വസിക്കണം, അല്ലെങ്കിൽ അതിന്റെ യഥാർത്ഥ റിസൾട്ട് നിങ്ങൾക്ക് കിട്ടണമെന്നുണ്ടെങ്കിൽ യു നീഡ് ടു നോ ദ പ്രീ അസംഷൻസ് ഓഫ് അക്കൗണ്ടിങ്, ഐ മീൻ എസ്പെഷ്യലി ഇൻ ദിസ് അക്കൗണ്ടിങ് കൺസെപ്റ്റ്. ദെൻ നിങ്ങൾ ആ അക്കൗണ്ടിങ് കൺസെപ്റ്റുമായിട്ട് അഗ്രി ചെയ്യുന്നുണ്ടെങ്കിൽ മാത്രമേ നിങ്ങൾക്ക് ഈ ഫൈനാൻഷ്യൽ സ്റ്റേറ്റ്മെന്റ് റിലയബിൾ ആവുള്ളൂ. ഓക്കെ, that means the postulate says that these financial statements are prepared based on certain pre-assumptions. And the next case, the financial statements are prepared based on certain personal judgments. Certain facts or figures presented to the financial statements are based on certain personal opinion, judgment, estimates, etc. So personal judgments and estimates or opinions are influenced in the financial statement. For example, tell me about the different methods for preparing or for calculating depreciation. What are the different methods used for calculating depreciation? പ്രധാനമായിട്ടുള്ള two methods എന്ന് പറയുന്നത് that was return on value method and straight line method. So this choosing the right methods is based on the discretion of the accountant of that organization. That means a personal judgment of the management of that organization. That's why accounting statements or the financial statements are influenced by the certain personal judgments or personal opinion of the management. And another example, provision for doubtful debts or provision for depreciation. Everything is done by the personal judgment. How much provision is to be created for the doubtful debts or how much provision is to be created for the depreciation. Everything is based on certain personal judgments of the management. That's why these financial statements are influenced by the personal judgments of different persons, I mean managers. So here these are the main four characteristics of financial statements. The first one was Financial statements are the recorded facts. Financial statements are the result of recorded facts. And the second one, accounting conventions. Different accounting conventions are used for the preparation of financial statement. And the third one was postulates. Postulates refers to financial statements are prepared based on certain pre-assumptions. And the last one, financial statements are influenced by certain personal judgments, opinions, statements, etc. Okay, these four are the main characteristics of financial statement, and you can find out different subsidiary characteristics of financial statements. And moving on, next, objectives of financial statements. Different objectives of financial statement. So here the first one, to provide reliable financial information about economic resources and obligations of a business firm. So provide reliable financial information of the business to the different users. That's the main and important objective of financial statements. Provide reliable and true financial picture of the entity. Provide true and reliable financial picture of the entity to the interested users. At the same time, regarding the economic resources such as assets, different assets, and also the obligations. So provide reliable financial information about the economic resource and obligations of the business. So our balance sheet will be showing the actual case of the different assets and liabilities of the firm. And moving on, the next, provide other needed information about the changes in such economic resources and obligation. So showing the changes in the economic resources and obligations. As per our latest Companies Act 2013 provisions, we will be preparing financial statements in different form. Usually in the past or plus one cases, or as per our plus one syllabus, we are preparing our financial statements in horizontal form. But as per Companies Act 2013, nowadays every companies are preparing their financial statements in vertical form. In vertical form, they will be showing both current year's balance and previous balance for each and every item which appear in the financial statements. So that will be showing the different changes in all the assets and liabilities over the period of time. And the next, to provide reliable information about the changes in net resources arising out of business activities. Various changes in net resources, that will be showing the net worth of the business. So the net capital or the net asset, everything will be provided through the financial statements. And to provide financial information that assists in estimating the earning potentials of the business. Through verifying the profit and loss account, we can verify the earning potential or the return on investment of this business. So we can predict the future of the business, or we based on this previous performance. So we can estimate, or the customers or the different users can estimate the earning potentials of the business by referring the financial statements, because the financial statement provides such a kind of data. And the last one, or the fifth one, to disclose the extent possible other information related to the financial statement that is relevant to the needs of the users of the statements. So the financial statements will be providing all the relevant information as per the relevance concepts, as per the relevance or the objectivity concept. The accounting information will be providing all the relevant data to make decision for the external and internal users. So these financial statements will be disclosing all the possible and relevant information for the decision making by these kind of persons. Different users, management, investors, employees, government, etc. So disclosing all the relevant information. So these are the basic objectives of financial statements. So these are the classes, these are the areas to be discussed for today. We discussed what is financial statement and what are the different characteristics of financial statement and what are the objectives of financial statements. Financial statements, simply we can say that financial statements are the results, this is the statement which shows the results of the business. It shows the financial results of the business. It is used to communicate the financial performance of an entity or of a business to the different interested users. And there can be main four features for this financial statement. First one, financial statements are the recorded facts and which are prepared on or based on some certain accounting conventions. And the third one, which are based on some pre-assumptions known as postulates. And the last one, what was the last case of last characteristic of financial statements? The fourth characteristic, sorry. So these are the topic for today. See you next class. Thank you.